Hello, everybody. As you're joining, if you want to drop your name, where you are in the world. Shahar likes to also know what your business structure is, S-corp, LLC, sole prop. If you want to drop that in the chat. And I will say we right now look like we have an intimate session of a few people who I hope have burning tax questions, because you could get a one-on-one here with a very talented tax professional, as we have this set up just to be a quick Ask Me Anything.
Ask me anything about taxes.
Ask me any. Well, yes. Thank you for clarifying. Thank you for clarifying.
We can list the topics that I can be an expert. So, how to manage a 15 and 14 years old teenagers.
Yeah, I was going to say, somehow, Shahar, I bet you have much more than just taxes at the ready. And since we're going, you guys, and everyone Laura's still got to pay quarterly taxes. If you have questions that you came to this session with, as it is an Ask Me Anything about taxes, we don't have a formal presentation set. I'm set with some questions that we often hear solos ask, and I'm happy to have a one-on-one with Shahar and start to pepper those. But if you've got a question, go ahead and pop it in, and we can start getting those answered. We'll run about 40 minutes. I can start with some questions, and then we can keep it going in the chat. Shahar, why don't we start actually while people are getting warmed up with their questions, with a question I think I hear the most. With Lettuce, we'll go out and do a lot of webinars talking to people about our product and how S-corp can help solos keep more of what they earn. And we almost always hear the question, explain to me the difference between LLC and S-corp. Or do I need an S-corp if I have an LLC? There's always a lot of misunderstanding in that LLC S-corp world. Do you want to take that one for us?
Yeah, I think it's the foundation of really kind of healthy business is the business structure. And I agree, there is a confusion, I think, in the world of entity creation or entity structure. LLC has a great branding, it promote itself really well. And LLC has its own unique place in the world of businesses. And we usually recommend business owners, as they kind of believe in themselves and believe in the industry that they are operate, and they feel that this is, their next phase in their career, set your LLC out of the get-go. I think there is nothing wrong about having an LLC, usually at the state that you domicile, that you reside. I think we get also tons of questions about, but I heard that, Wyoming can be a great state to incorporate my LLC because of privacy, or maybe Washington because there's no state tax, or maybe in Florida or Texas. In reality is that you will have to register the LLC at the state that you reside. This is the place that you do business. This is the place that you potentially will hire yourself if you decided to move to a more efficient entity structure like S-corp. So I think to start, we are saying that every S-corp is an LLC, but not every LLC is an S-corp. And I think that the decision of when S-corporation become, the best solution for me, it's usually driven by revenue. Again, I'm telling my story that when I started in 2005 and incorporate, some of my businesses, I went out of the get-go as an S-corp, which means I was a Washington State LLC and elect the S election because I knew that I was going to be successful. And my first year was about $350,000 in revenue. So it helped me to save a lot, on self-employment tax. But the main difference between LLC and an S-corp, LLC, it's a state entity. It's a legal entity that you have to register in the state that you reside, while S-corp, it's a federal election. You actually take your LLC to the IRS and say, hey, please, IRS, allow me to dress up or to custom or to basically build an S-corp experience on my LLC. So in a nutshell, we're not changing the LLC name. We're not changing the LLC EIN number. We do not change the LLC number with the state. It's a federal election that ask the permission of the IRS to tax my LLC as a corporation. And the main difference is corporations are not paying Social Security and Medicare. Corporations are not paying FICA tax. Corporations are not paying SE tax. It's kind of the same jargon for, or different jargon for the same tax that we're paying. It's the employment tax. So overall, the benefit is, one, you should, and we encourage you to be an incorporated structure. So take yourself out of the sole prop into the single member LLC. And then if you are seeing a path to 60, 80, or maybe even steady 6 figures of income, revenue coming into your business, S-corp, the election to be treated your LLC as an S-corp, will save you significant amount of money. And we're talking about between $10,000 to $20,000 a year.
It's amazing. While you were answering that question, we had a few more people pop in, so I'll just loop back to say this session is meant to be an Ask Me Anything about taxes. So it's meant to be your all's time with what burning questions you brought in. So if you want to pop them into the chat or the Q&A, we're here to help. And Stephanie she asked the question I think you just answered about what's that good benchmark for deciding if you should be taxed as an S-corp? And you said, 60, 80. Is there I know we led us to, Gabrielle will often say, if you can see the path to 60, 80,
yep,
go ahead and start to set up your S-corp. Is that the advice you like to give to, Shahar?
Yeah, again, if you depend on revenue, if you want kind of, some magic number, again, the savings that usually S corporation can introduce to your business, into your household, we're talking about 15%, of your net income. If you're basically, making about $80,000, 15% can be north of $12,000 of tax saving. It become, significant enough for people to consider the decision, because again, just to be honest, to move into an S corporation require a bit of a change, require a bit of an unlearning. We're coming with our biases of how do we run our businesses, and I think S corporation is such a great entity, very efficient from tax perspective. I think that the trade-offs is that it's a little bit more disciplined organization structure, which means we require, again, as we mentioned, a separate LLC. For that, we require a separate bank account, because again, the number one thing that we see is the reason for the IRS to hunt, taxpayers is the commingling, is the fact that you are mingling, your business and personal expenses. So would love kind of to see the separation. Potentially because it's a corporation, you need to manage P&L and balance sheet, which means Excel maybe it's not enough anymore. So you may need kind of an accounting system, although again, Lettuce has great accounting system, which is part of the subscription. So managing some of that through a digital ledger allow you to see kind of the P&L, the balance sheet, allow you to kind of slice the data based on different period of time. You can identify seasonality. You can benchmark between different years to see kind of how to build the budget, how to build a pro forma, and at times also to compare yourself to other businesses. We know that us self-employed, we live the constant FOMO, and kind of as a cookie monsters, we cannot delay gratification, and we actually want to see, how do we operate and how we can be even more efficient. But we're also curious about other people that, in the industry, how they kind of operate compared to us. Again, when you run an accounting system, you can actually do that. So I think, again, the discipline being around S corporation, if it's a revenue, probably around 60, 80,000, it makes sense. But I think there is some other reasons to become an S corporation, which is not just revenue, which we can expand on as well.
Yeah, I'll just offer that when I talk about becoming an S corp, it was a very emotional moment for me, because it felt like I was real. It felt like I had actually become a real business, and my kids stopped saying to me, "Mommy, when are you going to get a real job?" And I could say, "I'm a business owner." So there
Which is a great segment, when we speak about kind of a little bit of the mindset behind, because I think for us, we call it kind of the flywheel of awareness. It's really important for us at the last stage to show business owner the impact, because the impact for us as self-employed is the why we're doing things. And if we kind of understand a little bit more about why we're doing things, it's easier for us kind of to make decisions for our business. So again, we want to bring the awareness, and let us creating a lot of awareness and education in the world of business of one, and it can be different segment of the workforce, like different verticals within that business of one. And then we want to have a clear recommendation. Let us have a playbook that we want to use a specific bank, a specific, accounting records, a specific payroll provider, because if we can control that, tax stack or tech stack, it's easier for us to bring the value that we actually want to produce, which is, the recommendation and the actions that will show you an impact, value add, save you money, increase your take home, introduce you into retirement plan, introduce you to tax concept and strategy, like, paying your kids, or deduct your home office, or using kind of your car as a mechanism of an expense. Make sure that you control your expenses. We know that expenses are not a strategy. Expenses, it's what we use to keep the lights on, but expenses is money that will never come back. So I rather to use, a 401k or an HSA, health saving account, to fund $20,000, $7,000, whatever the limits are per individual or per household, in order to gain $20,000, $30,000 of expenses, which will reduce my tax liability, but also will keep the money on my side, instead of by the end of the year freak out and go and buy 3 laptops and prepay my marketing to Google and Facebook and whatever, just because I want to kind of reduce my tax bill. So we are teaching and educating people around how to run an efficient business. And I think what's the statement that I'm using lately is how we can convert, us professionals that have been really great in what we're doing, marketing, taxes, being a plumber, being, home services, how we can convert, your mindset between a service provider into a business owner. And I think once you sit, as a business owner wearing, the hat of the boss, I think it's easier to make those smart financial decisions.
Yeah, that's great. Here's a very tactical question for you. How do you become an S-corp?
So again, we need to create the LLC at the state level. So I'm a resident of state of Washington. I live in Seattle. So I would go to Secretary of State and establish a domestic LLC. Super simple. It costs in state of Washington $200. State of California charge you $75. You need to first decide if it's an LLC, if it's a corp, if it's a PLLC, if it's a PC. Again, PA. There's different nuance of the corporation or the LLC that you need to open based on your occupation. So again, Letters will help you to make the decisions. Just let us know, who are you? I'm an engineer operating in California. We'll let you know what the entity structure do you need. Most cases, again, LLC would be a great solution. So I would go to the Secretary of State in Washington and start a domestic LLC. And when I get the UBI number, the article of incorporation, the license, all of the documents, I would do 2 simple actions. I would go to the IRS website and I would establish an EIN number. I would get an employer identification number for my new LLC. And once I get that number, I would submit to the IRS one form, Form 2553. It's a 3-page form that pretty simple, the name of the business, who own it, me, Shahar, behind it, 100%, my address, my social security number, and then I'm asking the permission, check the box on page number 3. I'm starting a new business and asking basically the IRS to recognize my LLC and accept my election to be treated, my LLC, as an S-corp. That 3-page form can be faxed to the IRS. IRS is fax and mail only agency. We just spoke about how much paper is used by different state and federal agencies, and that's it. So creating an LLC on the state level, make sure that the LLC is operated and have valid acceptance by the state, which means getting the article of incorporation, the numbers, the operating agreement. And then 2 actions that I need to do with the IRS. One is to get an EIN number, employer identification number for the LLC, and then use all of the details that I have, the name of the business, the EIN, and my personal on Form 2553, fax to the IRS. And the second that the fax is accepted by the IRS, you're an S-corp. IRS will take about 30 to 60 days to send you an acceptance letter. Hey, dear Lisa, we just got your forms in the fax, and we're approving your S election as of the date that you ask us. Usually the date for the S-corp is the date of the incorporation or later. We can definitely speak about one concept that I really love, which is the latest election, but we'll keep it for a little bit later.
Okay. I also have to point out you missed the easy answer. I became an S-corp by signing up with Lettuce.
Correct.
They did all that what Shahar just said for me.
100%. Again, I'm giving as transparent as we are, and we support the Lettuce organization. I think this is why Lettuce is here, to make everything for you super easy. The only thing that you'll have to do is, by the way, the hardest part on starting an S corporation is pick up the name. So if it's a professional services, Shahar Planer LLC or whatever, it's easy. But if you need to come up with some interesting name today, pretty challenging. Again, most of the names are been taken. But again, there's steps that you can do on your own. And again, Lettuce makes super easy. And then you can also choose a domain and start the website and take care of your business and take it into the next level.
I do remember that moment where I was onboarding with Lettuce and they're like, what's your name? And I was like, just go. I went simple. Okay. Here's another good one, Gwen. This is a good question. I had this conversation recently with a friend. Once you become an S-corp, how does that affect your personal filings? So if your husband is W-2, you're filing jointly, what do you need to take into consideration?
So all what you do basically is you're bifurcating basically the business outside your 1040. This is what you do when you actually become an S-corp. As a single member LLC, we stated that you need to start as an LLC, and if your income is growing to the kind of $80,000 S election will save you significant amount of money. But as an LLC, I already become an LLC, I need to file as a single member LLC, Schedule C in my 1040. So this is kind of a one form, the 1040, which include my wife, my husband, my kids, income, interest, dividends, capital gains, rental, and then all of the deduction, your Schedule A deduction, your property taxes, your state tax, donation, contribution, goodwill, medical expenses, and then report all of the other kind of sources of income, capital gain, rental, K1, etc. All what you do basically when you choose to become an S corporation, you bifurcate, that business schedule outside into a separate form 1120S. So now on my 1040, I still have my husband, my kids, my interest, dividends, capital gain, my rental, my syndication, my K1, my foreign, all of the information. And now, because S corporation, it's a pass-through entity, which means there's no taxes that you need to pay on the federal level on the S corp. Some state will tax you on the state level, but there's no federal tax. The 1120S, the S corporation tax return, it's a pass-through tax return. It's an informational form only. And then the byproduct of the 1120S is a K1 and a W2, which means you'll get the W2, the K1, you plug it on your 1040, and this is how those two tax returns basically speak to each other. So again, I'm Shahar Planer, I'm a tax consultant, I made $300,000, I reported it onto my S-corp, into my 1120S. That specific year, I had $100,000 of expenses and $100,000 of payroll, which means I have about $200,000 of things that I can write off. So out of my $300,000, I left with $100,000 net. At the end of the day, $100,000 of my payroll will be reported on my W2, which I can take and plug in my 1040, and my K1, my distributions, will show my net $100,000 out of my business activity. By taking the K1 and the W2 report on my 1040, you will be taxed once on your individual level, and you'll have the 1120S to show basically separately your business activity. So 1120S, 1040 speak to each other through a pass-through relationship, the W2 and the K1, and the results, by the way, by you bifurcating kind of the S corporation outside your 1040 should be a reduction significantly in the amount of tax that you're paying, mainly around the self-employment tax.
Okay. Break out your crystal ball a little bit. But do you sense the IRS will change the rules for small businesses given the tax breaks for big ones?
I think that what the IRS is going to do is going to ease the creation of S-corp. We already see one bill that's going to pass pretty shortly for the fact that you can elect the S election within the tax return, so you don't need any separate form. So everything that we just spoke about, the fact that you need to go to the IRS and establish an EIN number and fax them, a 2553 form, they actually eliminating part of the process, allow you to do the election on the tax return, which means now you go to your accountant, you evaluate the process, you see that basically there is a need to become an S corporation, and within the actual tax return, we can make the election. But we also see, a trend that started back in 2016. I think when Trump was elected for the first time, we saw some concessions and some credits designed specifically, for the community of self-employed. So I am a huge believer that the tax system will continue to ease, the tax process. Unfortunately, most of the defaults that people are using still today, the sole prop structure, the SEP IRA for retirement, continue to penalize you, continue basically not to reward you for the journey that you decided. And therefore, again, the education that come from organizations like Lattice are critical for your business success. Part of what we do, we are getting our education, us as a firm, directly from legislators and from thought leaders and people that basically aware of what's come next. And I'm very positive and excited about the ability of people that are self-employed, business of one, independent contractors to thrive in the future through a very rewarding system.
That's great. Okay, here's your setup for your deferred S-corp. How do taxes differ if we have a sole proprietorship now and switch to an S-corp on, say, April 1st?
So again, sole prop cannot convert to an S-corp. There's a middle stage in between that you'll have to replace your sole prop first with a single member LLC or multi-member LLC, but you will have to incorporate, your sole prop. You'll have to dissolve your sole prop experience, and you'll have to incorporate a new LLC in order to get into the S-corp treatment. On an S corporation, basically we have two main journeys. I incorporated my LLC today in February of 2025, and I can become an S corporation from February 27 all the way to the end of the year and for the future. Unfortunately, if I incorporate it today, I cannot take my S-corp back to January 1st, 2025. And this is why we urge people to do at least the first step, become an LLC. So we'll have a way to go back to the date of incorporation. Because again, if you're delaying that decision and decided to incorporate in October, and between January and October, we had like a $200,000-$300,000 of income, unfortunately, we cannot protect, that income from the self-employment exposure. So one way is to incorporate today and make sure that we have, a nice run going to the future. What we see is actually something that we bring a lot of awareness into the market, is the fact that the IRS allow you to do your S election retroactively going back 3.5 years, as long as you had an LLC in place, which means we see many people actually follow the direction and have an LLC, and it's a simple structure to manage, and they are not aware kind of where is the right time kind of to become an S-corp. But then we see someone that incorporated the LLC in 2022. And in 2022, they filed single member LLC Schedule C. In 2023, they filed single member LLC Schedule C. And now they come to file their 2024. And we actually have a great solution for them. We can elect the S election all the way to 1/1/2024, because what we said is that I need an established LLC, and I can take it 3.5 years back. So usually we're not going 3.5 years back because it's required to open filed returns and amend them, and potentially again you'll get some notices, and you're waking kind of the IRS on some tax returns that potentially are out of statute. But if we only go to 2024 to block kind of your S-corp exposure or your S-selection exposure, we're talking about tens of thousands of dollars of tax savings. So again, the S-selection has, in a way, two ways. Start now, go forward, forget about the past. It is what it is. It's part of the cost of doing business. Embrace kind of the moment, the awareness that, okay, I just know now what I need to know and move forward, full force. But in case some of you already have an LLC established when in 2024, maybe even before 2023, just know that you're sitting on some golden egg that potentially can save you for this coming tax season $10,000 to $15,000 to $25,000.
And if you don't have an LLC and you started your S-corp today, you would just break up your year.
Correct. You'll have a short year. In the professional language, you'll have a short year. Let's say that we start your S-corp, your single member LLC, the state of Texas, and then choose the S-selection for the same date, March 1st, 2025. You'll have a short year, January 1st, all the way to February 28th. As a sole prop, you'll report that income on your Schedule C. You bifurcate it, the 2 years into two separate forms. And then as of March 1st, all the way to December 31st, the financials, the P&L, the profit and loss, the balance sheet, your income and expenses, everything will be reported under the 1120S, the S-corp tax return. Correct. It will be an year of transition, and you will have basically, two business tax returns, one under your 1040 Schedule C, for your sole prop, and then the 1120S will support your S journey again with the W2 and K1 that will come at the end of the year.
Well, here's a great question.
There's a great statement, Lisa, by Stephanie. I like the fact that she's promoting herself kind of as a virtual assistant, and without giving too much promotion. But I support the overall idea. When we speak with people that are self-employed and business of one, we always thrive for business efficiency. We always want to see their margins goes up because, again, we depend on every dollar that we generate, and we work hard basically to generate those dollar amounts. And I think that our kind of recommendation is, can you use software, or can you use some digital experience to reduce some of the cost? Can you use Lattice, to reduce your back office cost for tax, accounting, retirement, and overall business management? And the second layer is virtual assistant. Can I actually, outsource some of the work that we're doing? In real estate is the real estate coordinator or the marketing coordinator. We're using sometimes expensive labor to do analysis. So we export, some of the work, into subcontractors. We try to find first the virtual assistant, the one that live abroad that can actually do it for cheap. And only then we go, into the consultants and the subcontractors. And our last reserve is to hire full-time, employees. We see sometimes people jump too fast to hire, full-time employees that hurt at the end of the day their ability to fund retirement, because now I need to have some consideration with someone else. But also I'm just using sometimes a too much expensive, resource in my organization while I can go way cheaper.
Yeah. It's great. I mean, I personally, there was a question in here, I lost it, about, quarterly taxes. And just having let us automate that for me, it's amazing how much just brain power it takes. So we'll take this one. Yep. When you become an S-corp, do you still need to pay your quarterly taxes, or does it all go through payroll?
So ideally it should go all through payroll, but keep in mind that sometimes what we see is just your business operation. So sometimes the payroll is the one that covers, your business operation. So you're making $100,000 and you're in 20% tax bracket. So we know that, your tax liability will be about $20,000. So you want to make sure that you pay about, $1,500, $1,800 every month through the payroll that we run. And the payroll that we run through Lattice, the idea of the payroll is not to compensate you for your full value. Sometimes people are getting upset. What do you mean you're paying me $40,000. I'm making $400,000. Yeah, the payroll is a mechanism mainly for compliance, just to make sure that we show the IRS that you pay some Social Security and Medicare. And on the other end, it's providing us a mechanism to pay withholdings at source, both federal and state. So the beauty about paying payroll is the fact that the IRS see basically the payroll withholding in the system and they analyze them. They basically see them as they come equally through the year, even if you push 941 in Q4. It's very different than estimated tax payments, where every time that you pay an estimated tax payments and the IRS cash it, they cash it in a specific date. And if you're late in a couple of days, or the timing was not there, the extra interest or the late to pay penalties comes. On the other end, we know that majority of the community that we serve has a significant other, a partner that potentially bring an additional income. So if my wife or husband bring an additional W-2, now the income is kind of need to calculate it combined, while my husband and wife still have a withholding from his W-2. Sometimes when we combine kind of my business income and my wife's W-2, there is some, liability that we owe. I think that working with Lattice is also part of the awareness. Should we pay estimate? Should we make up for that gap, through the year? Are we paid enough? The 90% of this year, 110% of last year, which I can avoid from late to pay interest or penalties, and therefore I can carry the balance all the way to April 15. If I can carry the balance to April 15, or if I owe the IRS money with no interest or penalty, this is free loan interest. This is probably the cheapest loan that you can get from any financial institution. IRS is a financial institution, and you actually can borrow money from them by owe them tax until a specific date. Sometimes customers are making the calculation. Hey, my money is working really well somewhere, and I'm making 5% interest, a year, but the IRS is charging me 0.5% a month for 6 months. It's only 3%. It's an arbitrage. I'm willing to pay the IRS late because my money is making 5, and I need to pay the IRS at the end of the day 3. So I think payments to the IRS, it's not a straight line. It's not a one system fit for all, but in general, we want to make sure that the payroll is the heavy lifting mechanism that pay majority, of what we owe. If there is a significant other inside the organization in my household, I want to make sure that she paid enough. We may need to adjust their W-4, and then if still there is a balance due, yes, we recommend people to compensate that, with estimated tax payments. And listen, as you mentioned, let us, calculating your taxes daily, weekly, monthly, as long as we know more about your revenue stream and your income, we can let you know what that tax payment should be.
Here's a good question, I think, that flows from that kind of place you were thinking, Shahar, is when you've got expenses or deductions, or you've got a lot of startup costs, when is a good time to incur them? Can you roll them over to the next year? Like, how do you maximize that deduction expense space?
So usually, again, startup cost means that you're yet to generate any income. Otherwise, you can offset your expenses against any income. So usually when we speak about startup cost, and again, I'm trying to get into the mindset of whoever basically asked the question. Usually it's I have some expenses to kind of take off my business, as first days of me running my business, and then I hope that the income, will generate in the future. Usually the IRS allow you to carry about $5,000 of startup cost. But I think for our audience, again, we need you to join us after you figure out how to make money. Like while Lattice and our ecosystem will help you by free your time and give you some tools, we are best to operate you when you already figure out this $60,000, $80,000, maybe steady 6 figures of income, so we can help you to save, invest, retire, and everything else that, we bring kind of the massive playbook that we generate for self-employed. So, on one hand, if you have those $5,000 and you yet to open the doors, deduct it, it's fine. But if you can basically, time in a way that start your business and give yourself the year kind of, to generate income, you'll be able to offset more than just the startup cost and basically, offset it with the entire income that you brought for a specific tax year. So yeah, I think again, you can deduct those startup costs. We'll probably recommend you to open the doors of the business once you also have some kind of the sight to the revenue.
All right, we're down to 5 minutes left in this session. So if anyone has a burning question, they haven't typed in.
What?
I know, I knew this was going to go fast. I wasn't worried. And we have the best answer, the best question just sitting here in the chat. So if you're already an established business, you've got an LLC, you've got a business bank account. Ooh, this will be a little wrinkle to this question. But anyways, what's the process, A, with Lettuce, and then B, to add an S-corp status? The wrinkle obviously being the bank account, Shahar.
So again, I think we spoke about it a couple of times before. So I think for the S-corp, I have my LLC, and again, it's an easy process to elect my LLC to become an S-corp. I think again, Lettuce is making it super easy to join. It's a web application, ask you a few very simple questions, ask you to upload some documents kind of to support your LLC establishment. We need to verify your EIN number. And then again, we'll open a bank account, accounting system, tax system, retirement system, everything basically, will be set at the back end. Everything can be reviewed, on the Lettuce dashboard, the platform. You get recommendation and kind of action items, what's next. But the fun part is that we'll take care of most of the heavy lifting. We are the one that runs the payroll. We are the one, that run the books. We are the one that recommend on tax payment. And I think, again, as we continue to evolve, more and more tools will become available both for the users kind of to take some actions on their own, but also stuff that we can automate to make sure that you just review and just be informed, knowing kind of that your backend is working almost like independently.
And Laura, I'll just add too, you can always email support@lettuce.co, and there's a great team there that can walk you through the platform or answer any questions. And the other thing too, specifically that I was saying about the wrinkle is Lettuce will set you up with a business bank account, because in order for the platform to do the automation, we need to have that business bank account we're tied into. So if you haven't gone too far with setting up your own on the outside, it's obviously a service of Lettuce so that we can make sure that we're doing the automatic withholdings.
It's interesting that you brought kind of the bank account. When we kind of review some of the reservations and the pushback that customers has, sometimes we see the people tied somehow very emotionally, into their banking relationship. And then when we ask them kind of why, what do you get today from the bank? It's very hard sometimes to to state what is the real value that I'm getting from my bank, but still we get the pause. But I think again, the decision that Lettuce made that the bank should be united and be connected into the business account and make sure that we educate around commingling, but also we make sure that that account is always connected, and we know that the bank is always connected to the Lettuce system. This is where we can pull the data, clean the data, enhance the data, and then the magic happens. So again, I know that sometimes it's just it's a simple decision. Sometimes it's an emotional decision, but again, I think it's going back to the why. If people understand why, we try to kind of work with banks that are more technology front, that the connection will be established all the time. And unfortunately, again, banking still carry very legacy systems that sometimes for us, the more innovative solution in the market, still hard to work with. So again, I think banking is one of those first foundation of the solution, and we encourage people basically to move into banks that support way better the community of self-employed.
Shahar, we jumped in so quickly to all the great questions. We didn't also talk about how formations and lettuce, or you and lettuce, work together. And there's a question that says, you keep saying we. What's your relationship to lettuce?
So we refer lettuce as a sister company because, again, we believe that some of the community that we serve of the self-employed need the human in the loop. Lettuce believe that, there is a large segment of the workforce that thrive for a solution which is a product with, again, digital experience, and they have enough knowledge and experience how to run their own business. We serve, again, segments that sometimes has more complexity, maybe run multiple businesses, maybe there's some complexity on the individual level. Again, my husband ran a very successful, CFO practice, and it's a great solution, but, the spouse is an executive in Salesforce and has, stock options and RSUs, and maybe they relocate from a foreign country and they have some bank accounts still in France or in Portugal. And that level of complexity, sometimes is above and beyond what the latest solution today, and therefore Formations is existing. Formations is, again, it's a platform that allows self-employed to thrive, in the digital world, but also raise their hand and get the human support.
Great. We've reached time, and all the questions answered right at time. So I think we did pretty well. So thanks to everybody for joining us. This is our last breakout session. We've got one more keynote, and then your chance to keep the learning going with the challenge coming next week. And thank you, Shahar, for your time. I always walk away with one little learning for myself too.
Always here to help, and appreciate it. Thank you, Lisa, for your time and helping us to go through all of the questions. It was pretty.
That was
exciting.
Perfect.
Yeah.
All right. See everybody in the keynote.
Thank you.
Thank you.
See you later.